Hello and welcome to the Mutual Fund Show. This is the show where we talk about the key mutual fund queries that might be in the minds of investors and try and give them answers around their mutual fund investing strategy. I'm Neeraj Shah, and today on the show we're going to be talking about two key things. First, small cap funds have seen quite the rally over the last 12 months. But whether the recent cautionary tales are an issue for some of the more popular small cap funds. We've spoken at length about the SEBI warning, but more importantly, there were some small cap funds which had very large inflows into them, namely Quant Small Cap, Nippon India Small Cap, and HDFC Small Cap, cumulatively collecting about 17,000 crores between them in 2023. Should investors in these funds be worried? That's the first question that we ask on the show. Second question that we ask on the show to our guest today is around Axis funds. Now, when you look at some of the funds which had the largest form of outflows in 2023, Axis Blue Chip and Axis Focus 25 fill that list in the top 10. Could redemption-led pressures impact the fundamental performance of these funds going ahead? I think that's a question that we pose to our guests as well. And our guests on the show are Kshitiz Mahajan, Managing Partner and CEO of Complete Circle Wealth, as well as Vishal Dhawan, CEO of Plan Ahead Wealth Advisors. Gentlemen, both of you, thanks so much for taking the time out and being with us on the show. I want to start off with the first topic. We'll also have some queries that our viewers would have posted, which will come to you. But Kshitiz, let's start with you on this one. Quant, Nippon, HDFC Small Cap, plethora of money collected by these funds to the already existing AUMs that they may have had in 2023. So the sums of money that they manage anyways high. We're starting to see some bit of flatlining of performance for small caps by and large in 2024 thus far. Add to that the SEBI warning around small cap performance and redemption-led issues. Should investors in these funds be worried or no?
Well, good afternoon, Neeraj. I think very apt topic which you have picked. In fact, before actually jumping onto the numbers, I was actually going through little past what has happened, and just to make things simpler, why SEBI has done what it has done. We have seen in past also, and thanks to you only, we have covered this topic that most of the clients, they look at a past performance before getting into the new investment which they do. Let's go back in 2017 where you have a bull run of small and mid cap, where small cap index was up 57%, mid cap index was up 48% in calendar year. Most of the investors new to market has started coming in 2018 Jan, and they just saw the type of return in last couple of years these category have produced, and we have seen a lot of money coming in. And again, they had most of their year in 2018 when regulation changes happened. And obviously, you know, when you have performance which is leading the earnings, you have that correction of or re-rating happening on a downside on all these stocks. And that's what happened in 2018-19. And we have seen 3 years of lull period of our performance. And that's one problem which SEBI is now watching again, the type of flows what we have seen in markets. They just want to protect interest of retail investor. And as there is no major platform, I think and more platforms should come, which should talk about the future expected earning part also of the funds rather than just posting what is the past performance. I think that is something which is making seem little scary. Just to share the numbers, we have almost 11.5 crore folios, out of which 1.75 crore folios are around in small cap fund, which is 15% plus, and which is on a higher side. In fact, in January, it's a very good month for Demat as well as mutual fund folios around open. Total mutual fund folios open was around 47 lakh, out of which active funds or let's say open-ended funds folios are around 35 lakh, out of which 10 lakh, around 9.75 lakh, opened in the month of January only in small cap. So all this money which is coming now at the peak is just coming on the basis of the performance what we have seen in the last 2-3 years. And that is making things a little riskier for clients because they are just looking at, and you'll be surprised, 28% of the new folios are opening in small cap. Almost 18% are opening in mid cap. So this is just not on the asset allocation basis. This is just chasing return. And this is a little riskier and scary part because you know that, correction happen and normally this fraud will settle down, and then many of these investors will find it difficult to come back to the market again. So I think this is one of the reasons that regulator has taken a stance that and brought the new regulation in.
Yeah, but specifically for these funds, Kshitiz, just wondering, is there a case for a worry?
My only suggestion to people who are looking at these funds, who are investing into these funds, if they don't require a fund for next 7 years or so, they just stay invested. People who are coming in with the new money which they want to put, just do 6-month weekly STP. Normally we suggest 12 to 14 weeks, but I think these are markets, and in this cap, you should look at doing 6 months weekly STP. There's no need to worry. But if you need your funds, let's say in 1 year or 2 years' time, then you should book some profit off table and park funds in maybe balance advantage fund, or maybe a fund which are more large capish oriented. That's what you can look at. In fact, Neeraj, many of the people don't realize, but when they are actually buying a large cap or a multi cap fund, also they are getting exposure to a small and mid cap. So it's not that it's investing into only large cap side. So I think if you don't require your funds for next 5-7 years, no need to worry. But don't look at doing lump sum investment at these levels. It looks very lucrative in terms of past performance, but your performance is what is going to come in future.
Got it. Now, again, I want to bring this topic because while we've spoken about small cap funds, the large inflows in some of the funds and the large interest that investors have shown in 2023 into some of these small cap funds is also something that we want to bring out. Now, and Vishal, come to you on that as well. Thanks for joining in on the show. What about any of these three, or maybe one or two other funds in which there has been a large inflow of money done, AUMs being high, maybe performance on such a high AUM could become an issue, plus this warning. So is your view different from Kshitiz, wherein should investors on these funds specifically be worried due to the performance or due to the kind of flows that the funds have seen?
Sujit said, I think there are a couple of things additional that I'd like to add on. One is that we need to remember that these funds are these specific schemes, Quant, Nippon, HDFC, are slightly differently managed from each other. So if you look at the constructs of the specific schemes, you will find that Quant, for example, has a very high portfolio turnover style. So they keep getting in and out of stocks depending on where they see the opportunity. So for example, if you look at their portfolio right now, they have in excess of 20% of their portfolio in large companies. And one particular group makes up a very large portion of that 21%. In contrast, you might see that Nippon is already allowing money to come in only through SIPs and STPs, but not allowing the money to come in through a lump sum. And they've had this in place for a while, in a way, trying to moderate flows coming in so that they can manage what they have. Remember that Nippon already has more than 200 stocks in their portfolio, which means that how they're managing their fund size, which is 46,000 crores roughly of AUM, is to try to diversify across many stocks to manage this. And in contrast, if you look at something like HDFC, they sort of combine a little bit of a cash position by having 10% cash holdings in their portfolio with trying to sort of moderately manage turnover as well, somewhere between what Nippon does and what Quant does. So what you can see is there are three different styles at play in these three different small caps in the way that they're trying to manage this risk. Very clearly, whenever small caps do very well, which is what we've seen historically, there can either be a sharp price correction that we saw in 2017-18, or there can be a time correction which is very long. So if you go back in history and look at data, you could find that there are periods where even for between 5 and 7 years, investors have made no money on small caps because the returns got front-ended to investors, and investors who are chasing the past data could find that they are now in for a long period of either flat returns or negative returns. So clearly, I think there's, besides the SIP, STP route, we are suggesting to investors to do 2 or 3 things with small caps. One is, ensure that you cap your overall exposure to 10% to small cap stocks. Number 2 is have an investment horizon of 10 years. We think in this environment, even 5 to 7 years, which normally is a decent investment horizon to look at, may not be good enough. And third is, look at the style that is most suited to you as a small cap investor. So if you believe that there is a fund that you want to engage with, which is active, which churns portfolios aggressively, then choose the fund of that type. But be aware that each of these styles has their own advantages and limitations. So I think that's the way that we are trying to approach small cap investing at this point, especially with these three schemes.
Okay. We've spoken about the three small cap funds which saw the max inflows in 2023. Now, we're going to talking about two funds which have seen, well, significant outflows. To an extent, the performance has also, relative to some of the other funds, not been as great. Now, they are the funds from Axis, and if you just look at the performance, the graphics will come up on your screen for Axis Blue Chip being one of the ones and Axis Focus 25. You will see that the outflows from the fund for 2023 were fairly large as well. Vishal, I'd like to start off with you on this one. Axis Blue Chip, Axis Focus 25, significant outflows. They are not small cap funds, by the way. I think the graphic has an error. But effectively, they are funds from which the outflows were to the tune of 7,400 crores and about 4,000 crores. Vishal, there are some people who've sent in questions around what should they do, and we'll get one of the queries as well. But my larger question is this. If funds see significant redemptions, it may impact the fundamental performance as well if there is a dearth of inflows, simply because the fund house may be forced to maybe sell some of the wares or some of the goods that it doesn't want to. Now, my question with regards to these two funds is, for people who are invested in these funds still, should they stay invested or should they switch?
So I think it's a great question, because what happens is you need to break this into maybe three segments and three elements. One is to sort of understand what has Axis gone through over the last few years, right? So they've had two sort of big things that they've had to deal with. One is Axis Blue Chip and Axis Focus 25 had some very spectacular performances till a few years ago. And therefore, a lot of money came in on the back of that very strong past performance that had happened. Not all of the investors who came in at that point fully understood what was the investing style that Axis Blue Chip and Axis Focus 25 brought to the table. The second thing that happened is that there was a front-running episode that Axis had to deal with, which created some uncertainty in terms of how exactly they were going to get impacted, and whether investors were also negatively impacted as a result of that. And clearly, sometimes flow of information can be in the form of Chinese whispers. The third is now the outflows that they are dealing with, which has been significant. All of these items are actually very strongly correlated. So the starting point of this is that Axis Blue Chip and Axis Focus 25 have always followed a growth style of investing, both of them. And what happens is growth styles of investing do well typically when interest rates are low. And therefore, they had a very strong performance for a few years when interest rates were low globally as well as in India. Now, as interest rates started to move up, the growth style of investing itself starts to get impacted. And as a result of that impact, you automatically start to see lower performance. Now, if this combines with the stress that got created by the front-running episode, which we believe was probably a bad thing to have happened, but may not have impacted investors per se. I think you suddenly started to see this combined together to create the outflows. Now, the outflows, in our view, matter a lot when you run portfolios which are mid-cap and small-cap oriented. If you look at both these funds, the exposure to large caps are 80% and 96% respectively, which means that the underlying stocks that they hold are very liquid already. And because they are very liquid already, you get the ability to not have to worry too much about the outflows. And you can still manage the portfolio because you can keep paring down your positions in a certain way. So I think the way to think about this is, yes, they've gone through a bad patch. Lots of it is coming from the style that they follow, which is growth oriented. In fact, Focus 25 also focuses on quality as a sort of factor has not been the greatest performing factor. So I think the way investors need to look at it, step back, look at their entire portfolio, see how much of growth style funds they have in their portfolio, how much value. If they have too much growth style, then maybe they want to do an exit. Uh, because 3-year, 1-year, 5-year performance trailing is now impacted. Only 5-year rolling returns look healthy. Everything else is impacted. But if they're underweight on growth as a style, I don't think they need to go out there and panic and say, we need to change our portfolio because we are seeing Axis underperform.
Got it. So, Kshitiz, that point is well taken. But from a performance perspective as well, because they've had some performance issues in the past 3 years, should people stay here? So, Vishal's point is well taken. Let the redemption not be the reason for that. Is performance the reason for that, or even that's a thing of the past?
So I broadly agree with what Vishal is saying. I think they've lost the third event, which is there. Just to add to what Vishal is saying, they lost their CIO also. So there's a lot of things. In fact, Chandresh, who was the CEO, was himself a fund manager at one point in time. So the core team on the fund management side is not there, which is little worrisome. But having said that, I think they need to rejig the portfolio because there are a lot of growth funds otherwise which have done well in the basket. It's not that growth, and I echo that low interest rate was pushing growth, and because of high interest rate, it gets impacted. But many growth funds have realigned themselves and adjusted them well, where they are able to come up the curve. Here, I think with regard to the redemption, I don't see there is an issue on the performance side, but there's a lot of work to be done internally by Axis team on both the fund side. And normally you will like to give 4-5 years to a fund. So, and cycles happen. Right now it's excess funds have not done well. In the past there was some other AMC, and this is a part of a journey where my conviction on some bets will not play out, irrespective of the businesses are good. You see the portfolio, you'll not question mark why these companies are there in the portfolio. But yes, the price is not coming as per the names or earnings of the portfolio, and that's why it's not reflecting in the returns. But if you have a lot of growth style in your portfolio, then you can still look at shifting within Axis only. Some funds, there are other funds which are doing well, or you can look at moving out. So biggest problem of moving out, Neeraj, is that there's a cost involved of capital gain. If you're pretty sure that you are going to cover that 10% capital gain also in your next fund, which you are paying right now to have a better fund, and you can outperform the current performance after paying that 10% capital gain, regaining that 10% capital gain from the new fund, then you should move out. So sometimes equity markets, funds, they test our patience. There's nothing wrong with the house. But I'm saying that you have to take into account that capital gain part is also there. So having said that, yeah.
Point well taken. Point well taken. Okay. Now we have 3 minutes on the show. I'm going to try and take queries from each of you. We'll do a bit of a rapid fire so that we can cover more queries if we can. The first query has an Axis element to it, which is I've taken this. Raj, age 59 years, who is a gold traveling, saying that currently has SIP in 3 funds: ICICI FlexiCap, Axis Blue Chip, ICICI NASDAQ 100. The query will come up on your screen next, viewers. Can you suggest some high return funds apart from the small and mid caps, as they've already given good rally? Vishal, very quickly, under a minute, if you can suggest something.
So first point, I believe that, if your traveling goal is a short-term goal, equity is not the right asset class at all.
Pertinent, perfect.
And therefore, if you're looking at something which is with a 1-2 year investment horizon, and you insist that you want equity and you want it to be tax efficient, then at the most you would go to a scheme which has very little equity in it to sort of give you a small kicker with the risk that comes with equity. And therefore, you might look at a equity savings fund, like maybe the ICICI Prudential Equity Savings Fund. It's not a high return fund, but you need to map the goal to what you're trying to do.
Okay. A fair point out there. And Kshitiz, just a quick follow up there. You had mentioned that within Axis also there are some funds which are doing well if people want to switch out. This person has an Axis Blue Chip. Would you recommend a switch to any other Axis fund very quickly?
If you want to have a large cap fund only, then I don't think that, my sense is index fund is a better option with a low expense rather than just doing Axis or any other large cap fund. You should go for Nifty 50 or next Nifty 50. That's what one can do.
Okay, fair point. The second query is coming from Noel. Well, 22 years, so young investor, says, can you share your insight on value index funds like UTI Nifty 500 Value 50 Index Fund or the Motilal Oswal Enhanced Value Index Fund? Kshitiz, any thoughts here?
Well, no, these are smart beta funds, and just to make it simple, they are index fund with a different caveat attached to it, wherein they don't replicate the same percentage allocation of index fund, but they go with their various parameters like dividend yield, price to earning, let's say low churn or many other things where stocks are there. So they look at these type of parameters where you invest through that, and they try to beat index by taking the best out of the index and participating in that. But my sense is you have active funds which are doing so well. So and you're very young, so I think you should look at focus on a multi-cap type of portfolio for you. Otherwise, these are smart beta funds. That both these category of funds which are there.
Okay, I would love to take more queries. Noel wants to know about SBI Contra Fund as well, but maybe Noel will try and take that question on the next episode of the MF show because we're completely out of time here. Take a moment to thank both Kshitiz and Vishal for joining us on the show today and giving us their insights. And by the way, as we wrap up the MF show, the news flashes on your screen about the IT minister saying that Google has agreed to list all the apps as on status, which was there on March 1st, would mean that some of the stocks like InfoEdge and some of the others might be active in the session. I'm sure the next show will take forward all of those. Thanks so much for tuning in to this leg of the Mutual Fund Show.